All right, so I don't think I've ever done a dedicated video on Apple, so I'm going to do that today. Again, everyone knows what Apple is, so I don't really need to get into that. Again, starting out, again, $2.84 trillion company, just absolutely gigantic. Again, they do pay a dividend, which I'll get into. Free cash flow yield of 3.76%, which is decent. Wish it was a little bit better, but it is still decent. If we get into the insights here, again, financial health is pretty solid. One of the many good things about Apple is they do buy back a lot of shares. Growth has definitely slowed, but again, this is a business that's definitely a little bit cyclical. Profitability, very good, has been very good for a long time, as well as management. Again, if we look at the valuations here, they are above every single one of them by a little bit, which again, I'll get into more soon. If we look at the financials, again, this is one of, if not the most important thing, or things. So again, the main thing I'm looking at here is the shares outstanding, which is going down very nicely over time. They've been buying back shares ever since 2012, and I mean, in 2012 you have 26.47, and then now we're down to 15.81. So again, that's what that's almost a 50% drop, right? Almost a 50% drop in 11 years, 12 years. So again, that's very, very good to see, like extremely good to see. If we look at the balance sheet, again, decent balance sheet. I wouldn't say there's anything super concerning. I wish it was a little bit better for sure, but again, I wouldn't consider it to be super concerning. Getting into the cash flow here, free cash flow did peak, I think that's 2022, so not last year, but the year before. It was down a little bit in 23, but again, 23 technically was the second highest. And I mean, if you go back to 2014, free cash flow was 59 billion, right? So that's a lot of growth. I mean, that's doubling your free cash flow in 9 years. For a company this big, I think that's very impressive. And again, if we look at the metrics, like I mentioned earlier here, again, always consistent numbers. I mean, the lowest their free cash flow margin has been going back 8 years, 9 years, is 22.5%. That's very good. Operating cash flow, even better. They've never had a year where that numbers went below 22%. So again, very, very good there. If we look at return on invested capital, very, very good numbers there as well. Return on equity, very good. Free cash flow per share, again, going up very nicely over time. This is exactly what you want to see. So again, another very good thing there. Last thing here, let's check on the dividend, and then we'll get into the valuation. Again, 0.53% dividend right now, but again, that payout ratio is only 14%. They're growing at 5.6% per year. My guess is that they probably continue that. They probably continue a combination of buying back shares and increasing that dividend, which is exactly what you want to see. If you'd have bought this company a decade ago, you would have a yield on cost over 5%, which is very good. Again, let's get into the valuation here. Again, this is something that's very important to go over here as well, because if you look at over time, the valuation has consistently gone up. I mean, they've grown free cash flow per share at 14% per year, but people have paid almost 10% more per year just on existing levels of earnings. So that's something that's certainly concerning, in that the majority of the share price returns from Apple over the last decade have came from people simply paying more for the shares without any extra earnings or valuation or anything. So that's certainly something that's a little concerning. If we go, let's go to maybe 5 years roughly. Again, almost exactly the same. So again, that's something that's certainly concerning as well. Fair value for Apple, let's get into that here. So again, I have this discounted cash flow model here. So again, I assume you're going to pay a 20 price to free cash flow, which going back 10 years, that's the average price to free cash flow. They're going to grow 8% per year, which is significantly less than they've grown the last 10 years. But again, they're certainly going to see some diminishing returns. And again, that gives you a 9.4% compounded annual growth rate, which is pretty good. And the fair value being about $173 a share. Current price $182. I think that's a pretty good valuation in my opinion, right? In my opinion, that's a very good estimate. So again, what is the the gist of Apple. In my opinion, I think it's one of the better of the big tech companies of the Mag 7. I probably won't be the one that grows the best, but I think it's one of the safer ones long term. Right? I mean, they have a consistent stream of products. I think that their returns are arguably the most predictable of them, and they're not egregiously overpriced right now, which, the Nvidias of the world certainly are. Microsoft is, Tesla probably still is. I mean, if you look at Google, no. Amazon, definitely a little bit overvalued. Facebook, again, that's debatable. So again, if you look at Apple, they're definitely one of the better ones when it comes to returns / valuation, because Nvidia clearly is extremely expensive, Microsoft clearly is expensive, and Tesla still is expensive. So that's 3 of the 7 right there. And I mean, when you look at Google, you look at Facebook, you look at Amazon, you look at Apple, Apple's probably the strongest brand in there. I think Amazon still will do good. Google's still going to do good. Facebook, honestly, I'm kind of up in the air about that, because I can see it going either way. The problem is that the actual Facebook product, I think, is kind of dying, but they have other stuff in the works as well. I mean, they have Instagram, they have other stuff. So we will see. But I mean, as far as the Mag 7 goes, if I were to rank them in order of which ones I would like to own over the next 10 years, I would say probably Apple number 1. I probably would say Apple number 1. Number 2, I think, would be a fight between Google and Amazon. That would be my thoughts on the topic. So again, I would love to hear other people's thoughts on the topic, so please let me know there. And also, again, if you liked the video, like, subscribe, comment, all that good stuff, and stay tuned for more.